If you're like most people, nearing or in retirement, you've worked hard for decades to build up your nest egg. But here's the harsh truth. If you're not careful, you could lose thousands of dollars due to poor tax planning. Yes, you heard me right. Thousands. I don't want that to happen to you. In today's video, I'm going to outline 4 things you can begin doing, or at least consider, to keep more of your hard-earned money in your pocket so you're not tipping Uncle Sam. Welcome to the channel. If I haven't met you yet, my name's Christian Klassen. I'm the co-owner of 402 Financial, and I created this channel to help make the most out of your retirement and focus on ways to pay the least amount of tax over your lifetime. Let's get right into it. Tip number 1, invest in multiple types of accounts. Roth accounts, pre-tax accounts like your 401ks and IRAs, and if you've been fortunate enough, you can add to taxable brokerage accounts as well. The main difference between these 3 accounts is that they're all treated very differently tax-wise. When it comes to accessing the funds in retirement, by diversifying where you invest your money, you'll be able to have more control over your retirement income and not take massive tax hits. The second tip, it might be smart to take advantage of a Roth conversion. Roth conversion, simply put, is the transition of funds from a pre-tax account like a 401k or an IRA to a post-tax account like a Roth IRA, meaning that on the amount you converted, you'll pay tax now, but when you withdraw this, the cash and the growth is completely tax-free. It might make sense to consider a Roth conversion when you're in a lower tax bracket or before experiencing a hike in income. Doing so may help you save a great deal on taxes. Now, if you're finding this video helpful so far, make sure to give it a thumbs up and drop a comment below. Let me know if you've thought about Roth conversions. I'd love to hear your thoughts on why you decided or not to implement this specific strategy, as I plan to do more videos around it in the future. The third tax planning tip entails considering tax implications when withdrawing funds. It's essential to adopt a tax-efficient withdrawal strategy. Surprisingly, not all retirement income is taxed equally. Certain sources, such as a traditional IRA or 401k, withdrawals are subject to ordinary income tax rates. However, funds in Roth accounts are tax-free, and additionally, Social Security benefits may be partially taxed depending on your total income. So thus, it's crucial to be mindful of all these factors when planning how to withdraw funds in a tax-efficient manner during retirement. One approach to maximize tax efficiency is to begin withdrawals from a taxable brokerage account if you find yourself in a higher tax bracket. By doing so allows your tax-sheltered accounts like a 401k or IRA to continue growing. But on the other hand, let's say you're in a low-income year, it may be advantageous to withdraw funds from a pre-tax account, such as an IRA or a 401k. Employing this strategy can help avoid substantial tax bills in the future, particularly from required minimum distributions or RMDs, which have the potential to shoot you into a higher tax bracket during retirement, if not managed carefully. Last but not least, consider tax loss harvesting. Now, this is a strategy specific to taxable brokerage accounts, but if you're fortunate enough to have one, this applies to you, and you should consider this strategy at least once a year to see if you can find an opportunity to do one of 2 things. Either sell some investments at a loss and use those losses to offset your capital gains, or 2, you can even reduce your non-investment income by up to $3,000 per year. Both options which can reduce your tax bill. That being said, be wary of the wash sale rule. If you realize a loss from the sale of an investment and within 30 days purchase that same or substantially identical security, you will not be allowed to deduct the loss from your taxable income. So be mindful of that. Now, I know that was a brief overview of many different planning concepts, and if you're not sure where to start or you just have questions about certain planning strategies, I offer free calls to help determine if Roth conversions and other strategies like these mentioned in these videos make sense for you. I've got a few spots open during the week, so hit the link below and let's talk. Don't forget to hit the like button and subscribe for more tips on making the most out of your retirement. Until next time, I'll see you in the next video.